next 2 years, where do you see this advertisement revenue going?
So, from government advertising perspective, that is central government, state government and PSUs, as my colleague Ashish just mentioned, central government remains under a cloud for us as far as clarity on that is concerned. But what we are definitely doing is shifting our focus from central government to also the state governments, which have their own independent budgets. And we have seen healthy traction over there. And we will continue to work in those areas. As regards corporate advertising is concerned, we are, as I said, it's a very good lineup of films which will drive this business from the corporate advertising. Secondly, we have also done this tie-up for the South screens, increasing our network strength over there. And as we explained earlier in the call also, the overall product mix is going up because of increasing number of multiplex screens in the network. Keeping those in mind, we see a very good traction coming up in the immediate 2 quarters and going ahead also.
Okay, sir. Got my answer. Thank you.
Yeah.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Aditya Karan, an individual investor. Please go ahead.
Hi, thank you for taking the time. Can you guys hear me?
Yeah, very clear. Please.
Oh, great. So I just wanted to pick on the thing that you said about advertising share revenue. That's at 85%. So you're basically, I mean, I understand you said it's because of TSR. That's 500 screens on a base of 3,000. So 15% screens you added, but your advertising revenue share has gone to 85%. You're basically doing the business for free at this rate. So can you just explain what is the timing issue that you're talking about, and what's like, can you break it out? Like, what is your standalone advertising share excluding TSR? And I find it hard to attribute just 15% screens added and your advertising, you start giving on your entire revenue to your exhibitors. That can you just break that down and help us understand, like, what is this normalized going to look like? When is the revenue going to kick in from TSR?
Yeah. So let's simplify it. Otherwise, it will appear to be a complicated scenario, and it is not. So about 5.9 crores increase. Almost 3 crores of that is TSR. TSR, we have explained that it will become part of our regular network probably by end of Q3. What it means is that in TSR, we have a fixed commitment. It's not revenue sharing. It's a fixed commitment that we have given to them for their screens. What it means is that I need to bring that screen and integrate in my network faster so that my fixed commitment is taken care of by the higher revenue. Okay. So when we say revenue share paid, it is, in case of TSR, it is not percentage of revenue, but a fixed fee predominantly that we are paying. Okay. So 5.9 crores increase, almost 3 crores is coming from TSR. There are, in some of the initial questions, you must have seen that we are discussing about my multiplex network, which is 2,000 screens, and how that is going to be helpful going forward. But this multiplex screens, when they add a lot of value to my advertisement network as a whole, it comes at a cost to us. For what it means is, if my rest of the single screens or lower end multiplexes, I can sign up on a revenue share arrangement, which is my normal arrangement of whatever I earn, I'll give you 25%. That's a revenue sharing arrangement. In that case, you would never see this kind of a aberration where in one quarter the sharing is less, in other quarter higher. Now, those screens, the arrangement with multiplexes, some of the key chains is not like that. Over there, because they know their strength, they also insist on a higher fixed share. Now, this higher fixed share is what we call minimum guarantee, and it has an annual escalation in some of the cases. So, what you see in Q1 is another close to 1.8 crores towards this higher escalation that has happened of the older screens of multiplex category. And you rightly said that there is an addition, and that addition of the new screens has added only 60 lakh of new share. Now, this is on the cost front that you are seeing. But if you simply see, and when I explained you cost front, you must have now realized that a major chunk of my cost of theatre share is a fixed in nature. Now, when you look at my previous quarter's advertisement revenue, that was close to 30.5 crores, which has now dropped down. So, on a 30.5 crores ad revenue, even this higher ad share would have been maybe around 55 to 60%, what it appears at 85% now. So the key here is to make sure that your advertisement revenue keeps growing, and therefore you are able to cater to the needs of your exhibitors who are hoping that as by every passing year, we should be able to add value to them by increasing their revenue share in the advertisement. So this is how it is playing out. Coming to your second part of the question, when is it going to normalize? TSR I explained. By Q3, we are expecting that it should be a part of my regular network, which means it should generate regular revenue, and we should not have these kind of shocks. But these shocks we had explained in the very beginning. It will be there for 2 to 3 quarters. Rest of the thing, when the advertisement revenue grows, since the revenue share is fixed, the percentage automatically will drop to a level of 45 to 48%, which appears to be a normal kind of a range for us now in this scenario.
Yeah, so just on TSR, so you're saying it will be Q3, it will be part of the regular network. What is the incremental revenue that you get? Because I mean, I understand that you're paying them fixed right now. So are you losing money on TSR screens right now, or?
Answer is yes, and that is where the challenge was, and that is what we had very beginning said, that this is not only true for TSR. Any new network that we take which is bigger, which asks for a fixed share, even a single screen if I'm adding, and if he asks for a fixed share of say 15,000 rupees per month, and he says I'm not agreeing for a revenue share of say 25%, then I am not being able to start generating 15,000 rupees on that screen from month 1. My sales team will need some time to be able to evangelize that screen as part of the network. So what holds good for every screen holds good for a network also. And in case of TSR, it is even it's a bigger hit because they have asked for a fixed share. But that's not a concern, because if you see the advantages that UFO has been able to achieve, and it's a win-win for us and TSR both, that my South network has all of a sudden become so strong. If you remember in the few quarters back, we used to say that our network in South is weak and we are unable to monetize it for retail. But that scenario is very, very fast changing now. If you see my Kerala network, the revenues probably very soon I will be clocking the same revenues which I clocked last year when I'm not even 6 months there. So these are the very, very important drivers when you integrate critical networks with you, such as TSR.
But wasn't TSR running ads on their own earlier? Because I understand you're trying to say it's a seasoning process, like you need a couple of quarters to get it up to full RAM. But that would make sense if it was a new theatre, but this is an existing theatre with an existing ad network, or is that not the case? Like they didn't have any ad network at all?
So to answer that, they were running their advertisements earlier, but they were not able to fully monetize it the way established network like ours would be doing, and that is why we had this tie-up also. Secondly, there are technology differences between their network and our network, and the integration of that is going to take around 4 to 5 months. And hence this dip that we see in the revenues of these screens is a planned activity. It's not like that we are caught unaware that this will happen. And as Ashish said, this would take time for it to stabilize. But then it's a long-term deal that we have with them. One is the immediate monetization ability of their screens, And the second impact that needs to be really understood is that when this network adds to our network, our ability to monetize our network also goes up. So if we were earning X on our own screens, we will be earning a X plus factor going forward over there. So these two things have to be kept in perspective and read alongside each other.
Okay, got it. So we can expect that to normalize. Can you talk about the standalone, like excluding TSR? Yeah,
Can you join back the queue?
Let's take this question because otherwise we'll lose the link. And next question.
The standalone. Yeah, sure. Yeah, that sounds good. Just a standalone number, like excluding TSR, are you still at 45-50 or is that also gone up to 60-65?
No. So it's a simple math. You reduce 3 from my total ad share. Okay. So if you see my 16.5 crore share will go down to about 13.3 and my revenue would maybe go down by about crore and a half. So my sharing without TSR would still be high. It will be in the range of 60 to 63%. That is back of the envelope calculation. And that's purely because my revenue itself has dropped in this quarter versus not previous year's Q1, but versus Q4. And that is where this percentage has gone up to about 63-64%. Two components: one, revenue dropping, and two, annually some of the networks, not all, some of the networks where there was a contractual arrangement to increase the rates of the sharing, they have kicked in. So had the quarter been better on the content front, and it may sound as an excuse, but that's a fact, first 2 months ruining, then the advertisers don't really look at it. So there was a question before this, how we are looking at the advertisement potential. In fact, the ad sales teams are really gung-ho. They feel that the advertisers are sitting there with ready for allocation. The agencies are there ready for allocation to different mediums. But the medium has to prove its efficacy. Now, that is where our hands get tied. We cannot drive the content or the audience to the theater. But if that happens, then we are all set to monetize. Like Q4 was good. Maybe next quarter or the Diwali quarter would again be good on the content front, and you will directly see the benefits in the ad revenue.
Okay, thank you very much. I'll jump back in the queue.
Yeah, sure. Thank you.
Thank you.
Thank you. Next question comes from Pradeep Rawat from Yogia Capital. Please go ahead.
Yeah, good morning and thank you for the opportunity. So I have a couple of questions. So first one is, our government advertisement is still lower than the pre-pandemic level. And if we see on an absolute basis, our corporate and retail advertisement revenue is still below FY19 levels. So just wanted to get some sense around that. Why is that happening?
So on the government advertisement, we tried to explain in the previous question that there is a change in the way the central government ministries are doing allocations for advertisement, and they have literally almost stopped the allocation for your in-cinema advertisement network, and that has been the single largest hit, so to say, to UFO. Of course, we have got over it and we have managed to activate the state government revenue pipeline and the corporate to some extent. So yes, pre-pandemic to correct, we have this challenge. And that we see will continue till such time the government will start doing the allocations back. On corporate front, your observation that the corporate revenue has also not come back to the pre-pandemic level is also right. But if you see my numbers in last 2 years, you will see that there is a fast acceleration towards that. And on corporate front, we are not really worried the way we are on government front. Corporate will certainly outshine their own performance in the past, provided the content pipeline should not be as bad as it was in the first 2 months of this quarter. We don't need super hits every week, but we don't want a situation where expectedly good movies are really performing pathetic on box office. That is a negative big negative for my advertisement team.
Yeah. So could it be like corporate and retail segment is falling? Could the reason be the surge in the advertisement from online medium like Instagram or Facebook advertisements? So could it be a reason for that?
No. In fact, certainly not. If you see the digital pie in the overall ADX in India has significantly grown, but the ADX has also grown. In fact, the medium, your company's medium provides certain distinct advantages such as a captive time of a audience, a large screen experience. He doesn't have a remote control in hand. He's a paying audience. So except for the headcount, which also we are moving towards getting that kind of in a different way, the rest of the things are almost equal to a digital network. So if an advertiser has to prioritize after digital, what comes the best next is probably the in-cinema advertisement network. But it has its own limitations, such as you cannot have a longer run campaign in cinema because of average viewer sees only 5 or 8 movies in a year. So it is an impact medium and not a frequency medium is what we refer to. But this assumption that because the allocation to digital mediums is higher, therefore in cinema is taking a hit is not true. In fact, I would say that the corporate ad spends in UFO have really fast-paced in last 6 to 8 quarters ever since we are exiting COVID.
Yeah, understood. And I see that we have a lot, like a significant amount of cash in hand. So what is our plan to utilize this cash?
So now this is where even pre-pandemic level we used to have over 150 crores of cash. The reason why we have it is in those days we were waiting for right opportunities for business expansion. And when some of those opportunities which we tried but which could not get implemented, certain merger opportunities, that time we distributed that excess cash. In fact, 22nd March COVID hit and 10th of March we distributed 60 crores of our cash. So your company believes in a philosophy that excess cash which we cannot use should be returned back. However, we keep a kitty with us because in case of any business opportunities, it's difficult to tap bank because bank cannot fund you for business acquisition. That doesn't mean that we have any acquisition on horizon. But that's a kitty that we have kept, and therefore your net cash plus 50 crores. Pre-pandemic we were almost 120, 130 crores net cash at generally at any point in time till the time the dividend was paid out.
Yeah, understood. And what would be the normalized revenue from TSR for a single financial year?
So per screen revenue, I can tell you, you can assume that per screen revenue from TSR, because I don't want to say because it is TSR, because it is a better quality screen, that revenue would be equivalent to my better quality screen revenue that I generate in the rest of my network, which is generally anywhere between 30 to 80, 90% higher than my average, depending upon the screen and the location of the screen.
Yeah, understood. Can you name some of the competitors that we competed?
Can you join back?
Let's take this last question.
Okay.
Yeah.
Yeah, can you name some of the competitors?
Some of UFO's competitors?
Yes.
So one would be Cube in the Cube, and then you have other players like Cinematica in Andhra, or even TSR in the south, and other. Largely these are the key players. One is KSR also, which are smaller players.
Two big players, UFO and Cube, if I have to simplify the answer to your question.
Yeah, understood. Thank you and all the best.
Thank you.
Thank you.
Thank you. Next question comes from Aniket Gada, an individual investor. Please go ahead.
Hello everyone, and thanks for the opportunity. I just one question. It's regarding the latest partnership the UFO has with Neural Garage. Could you elaborate on it? Like, how does it help us, and what is the effective revenue that we can generate from it? Because it looks like the service of this is during the editing phase of the movie and not during the relating to the exhibition of the movie and that. So could you just elaborate on that?
Yeah. So Neural Garage is a technology company, and what they have come up with technology is called visual dub, and that is where we have associated with them for providing marketing and technological services for dubbed films rather. So essentially what visual dub does is, currently if you have seen any dubbed films from foreign languages or say Indian languages from south to north, the lip movement and the audio sync between the lip movement and the dialogues is so far off that it takes away the viewing pleasure of the film. Okay. Also, it is not able to let this become as a mainstream part of the films because of this negative effect of mismatch between the audio and visual sync over here. What visual dub technology does is it matches the dialogues to the lip movements of the characters so as to make it seem as if the actual actor is speaking itself and it is not a dubbed version. And this vastly improves the viewing experience. And this is a machine learning and AI driven technology. So with time it will grow better and better. And this has very good potential for dubbed content and we have very good hopes from this technology that it will find acceptance in the market. So as I said, for us there is no cost in this. This is a technical services revenue sharing arrangement as part of our bouquet of services that we offer to the film industry, and it will find big scale acceptance amongst the film producers and the people who are dubbing it over here. Secondly, it also has good implications because many times producers who want to make films in other languages end up shooting for it twice. A scene may be shot twice with a Telugu dialogue or with a Hindi dialogue again. You understand? Which increases the cost of the shooting of the film because you spend double the time almost in doing something. Now, they do this primarily to avoid this mismatch between the lip movement and the dialogues. And this is exactly what this technology addresses. So you could actually have one single shot taken and it could be dubbed seamlessly in other languages. So this is essentially what the whole technology is about. And as I said, part of a bouquet of services for the industry. It's a new technology. We will be taking it to the market. It's not been taken out over here, so there's a price finding mechanism that will take place. But there is a definite application for it, and there is a need and a gap for this. So, as of now, I would just say that it's something which the industry is also looking forward to.
So, this would be the production phase of the filmmaking, right? So, are we venturing into that? Because
no, it won't be production. It won't be production fee. It will be a post-production activity. Once the film is completed and the dubbing is done, then we match the lips to the audio track, making it seamless without any lip sync gaps. So it's a post-production technology. It happens not on the production field as such.
Okay, so yeah, basically distributing the services, right, to the film industry. And,
yes.
Yeah, and do we have to put some additional resource on it for like providing the services to the film industry?
No, not really.
Okay, thank you. That's it for me.
Thank you.
Thank you. We have a follow-up question from Ankit Kanodia from Smart Sync Services. Please go ahead.
Yeah. Thank you for allowing a follow-up. So my next question is, so one question was related to advertisement, which you have already answered, but the other question is related to the caravan advertisement revenue. Number one, if you can just share, even though it is currently a very minuscule portion of our total advertisement revenue and our total revenue per se. But from a longer term perspective, how do you see this revenue stream going forward? That is one. And the second question is again related to what is the working capital situation in caravan compared to the other main sources of advertisement revenue? Do we have any advantage, disadvantage in caravan? That would be very helpful.
So second question I'll take first. The working capital or the data realization of caravan is not really different than what it is for the corporate ads. Or if it's a government or a PSU running a caravan van, then their receivable cycle is exactly the same the way the receivable cycle is for any other PSU or state government ad sales contract. So it's exactly like for the ad sales team, it's just another billing, and the same. The client doesn't differentiate, either prioritize or delays the payment. So it's on the same footing. So this is on your working capital. As far as the core question of caravan is concerned, we have been nurturing this business. We have, in fact, pre-pandemic, during pandemic, and even after, we have been running these vans. The vans have a lot of potential, which is quite evident even during election campaigns. The political parties have picked it. The government also picks it for taking their messaging deeper into the semi-rural and rural India. Not just these, even the corporates many times want to use this to again take their branding or a product placement deeper. So it is a interesting business which gives a good margins also. But more than that, it acts as a tool for my advertising team to provide a comprehensive kind of a offering to a client. But if you're looking at it from a pure modeling perspective, you should not have a very high hopes, because here the revenue potential is directly linked with the number of vans. Unlike my advertising network where the investment is already done, I am selling only 2.5 minutes today. Potentially I can go to 15-18 minutes. The rate can also double. So there the potential is not linked with my new capex in my existing screens. But in case of caravan, that's not true. If you really want to assume that this would really grow, then it would mean that we need to then invest into these caravans, and if required, we will do that. But for modeling purpose, this is not a very big driver, unlike my the core advertising network.
Got it. That was really helpful. And related to Nova Cinemas, in the last call we mentioned that we expect to open a couple of these properties in Q1. Any update on that?
Yeah, so we have got a license to operate one of the screens in UP. We had told you that there are 3 which are under construction. The construction of 2 is complete. So one of the screen, we are just waiting for a good movie. Probably by middle of this month or end of this month, we will launch it, that particular screen in UP. And the other 2 will also follow the suit. So we should be able to get indication of how the reception of this new offering is in those centers. Maybe by Q4 we'll have a better idea, because then we'll also have one meaningful season of Diwali to Christmas behind us.
Got it. Any reason for having opened the first one in case of a town like Meerut, not in a say like a place like say Delhi, Mumbai, Bangalore, something like that?
Okay. So this offering is meant not for metropolis or even bigger cities or even I would say mid-sized cities. This offering is for semi-urban or rural areas. Okay. That's where. So you know what, the total audience that we have for movies in India, it's entirely into urban area, and in urban also, the key cities.
Right.
So if we really want to expand the overall revenue